treasury bonds dumped in favor of something like gold. It's a very complex situation, but the bottom line is simply this. If you try to control Mother Nature, you try to hold back interest rates when the world would say, well, your currency, if we're going to hold that, we really think we should get a higher return. The market should be saying that, not the bankers. It creates distortions, it creates anomalies, it creates problems. It is not a good thing. Yield curve control is unnatural and it's a bad thing.
Prepare for an engaging conversation featuring Andy Schectman, CEO of Miles Franklin Precious Metals. In a world riddled with conflict and geopolitical realignments, there's a noticeable exodus from the dollar towards precious metals. The astute investors are swiftly amassing gold and silver, setting new benchmarks, and according to Andy, this trend is set to skyrocket further. Join us as we uncover the driving forces behind this seismic shift in the financial sphere. A discussion that might just reshape your investment perspective amidst today's tumultuous times.
What's happening in the Middle East against the West, you could see it turn into something much deeper than that, what I've been focusing on for 3+ years, and that is Saudi Arabia and the rest of their OPEC brothers and sisters, all of whom are on the Belt Road Initiative, say, you know what, listen, you guys are going green, and this is kind of you've signed an executive order to do it. This is kind of the straw that breaks the camel's back in terms of our massive divergence in ideology. For 50 years, you protected us. We've valued oil in dollars. As a result, we've put the proceeds of those dollars and that oil sales into treasuries. Last 2 years in treasuries have been a disaster. We're down 50%. You're inflating your dollar. And you are on the side of these geopolitical events that we don't agree with. And so with all due respect, we are now breaking the dollar peg for purchasing oil. And I think when you talk about the fact that at the very least we should expect much higher oil prices, anything we do, from surfing the internet to mining to farming, anything has an impact with higher energy prices and inflation. And I think that the ramifications that this will have in the treasury market is something that will continue this downdraft of treasury values and increase in rates, which will push, I believe, the very sophisticated investor, let's say the central bank level investor, or the commercial bank level, the big money, I think, is diverging away from treasuries, which, I don't think there's much of a coincidence, had their worst year ever in the 10-year treasury last year. And at the same time, we see the central banks buying more gold than ever. In fact, this year, those numbers are up 14% year over year, and last year was the biggest year ever. The last 18 months is the most gold buying the central banks have ever done on record. So this is the beginning, as these types of investors, like the central banks, are always 3-4 steps ahead of the crowd. They know the playbook. They see where this is going. They're selling treasuries. They're buying precious metals. I think the world is shifting, especially in times of turmoil, away from debt instruments and promises and over leverage into something that the world has collectively agreed to, as wealth. They've agreed for 5,000, 6,000 years that gold and silver are wealth. And I think we are seeing a shift in that direction. And as all of this geopolitical chaos accelerates, 2 wars happening that could quickly escalate into something far worse, far worse. Hopefully, God willing, it doesn't. But I think the shift is not about return on your money. It's more about return of your money. And I think this is why you're seeing this concerted effort by the people who are ahead of the curve, already making a concerted effort to slowly sell dollars, sell treasuries, and accumulate precious metals. I think this is just the very beginning. And it's this type of conflict that could rapidly change the backdrop. I mean, exponentially so. If we lose the petro peg, feels to me like that's almost inevitable by this escalation. Well, more so in silver than in gold. At least gold is close to its all-time high, 10% or so. Silver's under half of its all-time high, and that has killed all incentive over the last several years for exploration. And I don't know what the lag time is from exploration to discovery to production, but I would assume it's quite lengthy. And so this is already happening. It will only accelerate as the cost inputs go higher. And so it's a situation where in silver in particular, like if you look at all the silver that was mined last year, somewhere in the neighborhood of 1 billion ounces, roughly, only 350 million or 35% of it came from companies who mined silver. The rest of it was byproduct discovery, where companies mining tin or copper or gold or something will say, oh, look, we found some silver. So, yeah, I mean, it's a very small mining industry. I think your point is valid in anything when you're talking about from farming to mining and anything in between where you use lots of energy to move the earth and to accumulate metals or to accumulate a harvest, plant and reap the harvest. You need lots of energy. And as the cost component goes higher, so too does you have to pass that price on. And also it becomes harder and harder, in particular with mining, to, especially when you're exploring, you're hoping you find something, you're spending an awful lot of money, increasingly so in terms of energy, to hopefully find those deposits. So yes, there's no question, but that rising energy cost would be one of the biggest factors or deterrents to the mining industry being successful, and in particular finding new deposits or exploring altogether. So yeah, it definitely will be a headwind to the mining industry. Treasury bonds dumped in favor of something like gold. It's a very complex situation, but the bottom line is simply this: if you try to control Mother Nature, you try to hold back interest rates when the world would say, well, your currency, if we're going to hold that, we really think we should get a higher return. The market should be saying that, not the bankers. It creates distortions, it creates anomalies, it creates problems. And when those problems unwind, like we're going to see here in the United States, I would argue the consequences are often exponentially greater in the unwinding as the benefits were in the suppression. So it's not a good thing. And it's going to ultimately lead to, in a country that supposedly has had very low inflation, Japan, for quite some time, under 2%, I would expect we see inflation rise quite a bit. And if the yield control doesn't get out of control, where they just have no ability to hold it back anymore, the distortions they continue to create by suppressing will only make the ultimate outcome that much worse. It is not a good thing. Yield curve control is unnatural, and it's a bad thing.
Thank you for joining us in this insightful conversation with Andy Schectman from Miles Franklin Precious Metals. As we navigate a world in flux, the move towards precious metals gains significance in safeguarding wealth. Stay tuned for more expert perspectives and strategies to thrive in evolving financial landscapes. Don't forget to like, share, and subscribe for future updates. Until next time, stay informed and empowered in your financial decisions.